seen premiums come down to their lowest level in more or less 2 years on most items. We've seen tremendous volume. There is an inverse relationship in the physical industry between falling prices and increased volume. And the interesting thing is that volume is always to the purchasing side. We see virtually nothing in liquidations as the price falls.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And once again, I have Andy Schectman on the line for this week's Physical Silver Report. Andy is from Miles Franklin and does the physical silver sales, which, curious to check in, Andy, because obviously it was a painful week on the Comex silver spot price, seeing a lot of liquidation as fears of a recession continue to go throughout the economy. So with that said, good to have you on in here, and would be curious to get your update of what you've been seeing on the physical silver side this week.
Yeah, good to be here, Chris. Thanks for having me, buddy. Yeah, we've seen premiums come down to their lowest level in more or less 2 years on most items. We've seen tremendous volume. There is an inverse relationship in the physical industry between falling prices and increased volume. And the interesting thing is that volume is always to the purchasing side. We see virtually nothing in liquidations as the price falls, completely detached from what one would believe in watching a falling price. This is something that you and I discussed many years ago in your book on how when the price falls, the demand for physical increases, and typically followed by rising premiums. So, I guess the bottom line is this is a paper phenomenon, one where the paper price on Comex controls things, but people in this industry realize that there is value to be found in these lower prices. And, if you were just simply to look at the order volume and order flow, you would never in a million years think that the price of metals fell the way that they have recently. So great volume, huge interest, did the biggest order of my career last week, and virtually nothing in the way of liquidation. So it's somewhat confusing when you're watching it from this side of the table.
And so I know we talked about this last week, but worth digging in again. What are the people saying that are calling? Are they worried that the price goes further? I mentioned earlier this week that based on what we're seeing in the financial sector, as well as the Fed hiking interest rates, certainly I see the possibility of further downside right here. And I guess that's going to differ by the person, how they view that. Some people are certainly frustrated, and understandably so, that the price is lower. Certainly better buying at a lower price than a higher price. But how do you balance all of that, and what are people saying when they call in?
Yeah, most people are actually, ironically, are optimistic about lower prices as it gives them a subsidy into entry. I think that what the market is saying is that they're factoring in or pricing in a Fed pivot where, recession looming, Fed pivots, starts to ease again and making it more accommodative for equities. But, I think the Fed loses complete and total credibility if and when that happens. But I also think it's important to understand one thing, and people talk about gold and silver having their inflation hedge properties. Doug Casey has made famous the statement that gold and silver are the only assets that are not simultaneously someone else's liability. Roy Jastrom, I believe was his name, and I think the title of the article was The Golden Sextant, something to that extent. I read it a long time ago. I believe he was a professor of economics, I want to say at University of Alabama, University of Georgia, one of those two, where he came out with a study basically saying that gold and silver, well, gold in particular, will perform best in deflation. as it is not someone else's. There is no counterparty risk. There is not someone else's liability. And so if we see a recession or a depression, if we see a hyperinflation, stagflation, whatever environment we see, whether it be inflationary or deflationary, I could argue that gold and silver are going to provide a life raft of sort in an environment where, you know, we've seen so much leverage that has pushed all the asset prices up to extraordinary levels. The contraction of credit and the raising of interest rates is as bearish for those markets as the easy interest rates and inflationary environment was bullish. So, you know, I think this is a short-term deal and follows part and parcel with all of the other moments we've seen in past like this, where a baby gets thrown out with the bathwater and metals come down only to find a base and shoot straight up as that environment, you know, washes away. We're always told that the rush to sell liquid assets in an environment where margin calls are persistent or where things are starting to come down, they always say that's the reason we see prices fall, and maybe it is, but typically it's followed you know, at a short period later with a huge escalation in prices. Now, I'm not saying that's going to happen. I'm just simply saying that I don't think a new narrative has been written for precious metals. I think this is just confusion by the market, and I expect to see a resumption, at least of some sort of normality here pretty soon, especially looking at the commitment of traders reports, where the commercial banks are really, really in a bullish position to see the price move forward, maybe as bullish as I've seen in quite some time in terms of their positioning. So I'm expecting this to be short-lived.
Well, certainly will be interesting to see how that unfolds. We did a roundtable this week talking about how when you look at the M2 data, it appears as if the money supply is about to finally begin contracting. A quick look at the Fed's balance sheet shows that so far not much movement there. And I wonder if the next step is that, all right, maybe there will be some contraction and we'll continue to see the interest rate hikes, yet I don't think that they're going to anywhere near 20% like Volcker said. I do believe Powell, at least his latest comments where he says he's committed to fighting inflation on some level. Yet when I think of what does that actually mean, probably in a couple of months and with a few more interest rate hikes, I could very well see that CPI, whatever one thinks of that, wouldn't be at 8 or 9%. I don't know if it's going to go back down to the 2%, but somewhere in there, which I think often gets missed, is that it's not that prices are going to go back to where they were a couple of years ago. They're just talking about slowing that 10%, 8 or 9% year over year increase. And I did hear Craig Hemke in his podcast earlier this week. He mentioned now there was even talks floating around there of an interest rate cut by December. Obviously, that's a couple months out and just speculation, but the fact that that's being talked about in the marketplace, I guess that will depend on what happens over the next couple of months and how things go with the hikes, which so far has not been smooth. But whether there's a full reversal or pivot, as many have been saying, that quickly or not, does that sound like a reasonable forecast of what we have coming ahead of us?
Well, I think the market is certainly believing that. That's why I think you saw it rally the way that it did on Friday, as you know, the Atlanta Fed revised their forecast for Q2 GDP to -1%, which would be 2 quarters in a row of negative growth in the GDP, which by classic definition means recession. And I think that this is exactly why you're seeing the market rally. They believe the Fed's going to pivot. If they do, I think it really ends any semblance of credibility for the Fed when they have been talking a tough game and then pivot again to a realization that, as Richard Russell used to always say, it's inflate or die, that governments have always chosen inflation, easing, and the printing press over the tough decisions and austerity. So yes, I do think it sounds very reasonable. I know the smart money, the betting money, is saying that's exactly what's going to happen. But I think it really spells the end of credibility for a Federal Reserve who, for the last several months, has been telling us not only was inflation transitory, but then it became structural, but that the economy was strong and we're not heading into a recession, but now we are heading into a recession. Maybe the economy isn't as strong. And you're seeing all of these heads of big corporations, from Elon Musk to Bezos to Jamie Dimon, they're all coming out and saying that a big recession is on the horizon. So, yeah, I think that's exactly what the market is assuming that we're going to see priced in is a resumption of quantitative easing, not the quantitative tightening that they've been talking about. If I had to guess, we'll see one big increase in rates, maybe 100 basis points, which really isn't big, as you mentioned, Volcker raising it to 19.75% on the federal funds rate. That's big. 100 basis points against a 9% inflation tick, which would raise it to 2.5%, is still pretty darn big. But I think they'll do that to give them the breathing room to reverse course, to pivot from 2.5% back down to a lower level. That if indeed that happens, I think that's what we'll see. So yeah, I think the smart money, the betting money, is saying that's right where we're heading.
Yeah, it was interesting also this week. We saw the dollar hit, I believe it was a 19-year high, which is really interesting. Gold was about $200 or $300 back when last time that happened. I'm guessing, without having the chart in front of me, silver was around $4 or $5. And you wonder where things are headed from there. I mean, again, we see that the Fed is raising rates now, but despite that, a 10x in the Federal Reserve's balance sheet. And I know 20 years ago, maybe there was a lot less people talking about, what happens after the dollar, this being a Ponzi scheme. And now we have Russia and China talking about reserve baskets of currency. I don't think anybody knows exactly how that plays out. Although, again, to what you said, it just seems to me hard to see a full Volcker moment there, where that's what, I guess, drew me into silver initially, not knowing when or how this gets resolved, but the fact that you can't ever unprint all that money without unraveling things. I don't know that we're going to get a full unraveling now, and I think we'll see that reversal at some point before you would get a full unraveling. Although with all of that said, we did have a couple of comments come in this week. I know some people took exception to the way that you've described silver or gold as well. And I was wondering if you could comment on that in the context of what I was saying, where, you have two difficult long-term outcomes based on the monetary policy. And I get what you're saying, and I know that a couple of those people contacted you as well, and just wanted to give you a chance to address that.
I'm glad you did. And I had a nice conversation via email with one of them. And I have always viewed gold and silver as wealth. I think going back 5,000 years, emperors, kings, queens, pharaohs, they always owned it as wealth, not as an investment. The gentleman basically said, look, how can it be wealth if it has lost value over the last several years? That those of us who are holding it are bleeding wealth, while guys like you who are selling it are increasing wealth. Well, first of all, my response to him was, I've been doing this for 30 years, and a good portion of my career, we didn't know how we'd pay the bills and keep the lights on. It wasn't always an environment where people wanted to purchase precious metals. Quite to the contrary, much of the time, it was a very difficult job where you could hear the crickets chirping at 3 p.m. But my real response to that is simply this: if you only view wealth in the light of rising prices, then how can any of us view our wealth in terms of dollars? And you look at the dollar, how it's bled value year after year after year after year, where since 1971 alone, it's probably lost 90+% of its purchasing power. Go back to the inception of the Fed in 1913, and it's worth what, a penny or two? I don't know the exact number, but certainly lost a huge amount of its value, bleeding another 8 or 9% per year here in current inflation and money creation. So I understand the frustration when prices have come down, and you and I have had long discussions offline about philosophically about things. And look, I don't view it as an investment. Some people may. I don't. I view it as wealth, and I've accumulated it as wealth for 33 years. Every 2 weeks I have purchased it because to me it is my savings. It is my wealth. And I think when you take a look at the context of the U.S. dollar, which continues to bleed wealth, bleed value in terms of inflation, find something where we can find stability in price and call it wealth, and maybe you're onto something. But in the meantime, I will fall back on 5,000 years worth of history, and I think people of means, going all the way back to biblical times, viewed gold and silver as wealth, certainly not as an investment. So I certainly don't mean to come across as being anything other than sincere. And that's my strong point, is my honesty and my sincerity. And I'm not the smartest guy in the room. Certainly, I would take you as my phone a friend before recommending myself. In terms of intellect, you're up at the top. I'm someone who's sincere and honest and tells it like it is. When I started this company in 1989, I was 19 years old. I didn't have a dime to my name, nor did my parents, who sold their life insurance policies to start this company and borrowed $60,000 from my dad's best friend. His middle name was Franklin. My dad's middle name was Miles, and he taught me, my father did, to save. He said, you buy something every 2 weeks or I'll fire you. Well, that was 33 years ago, and I've honored my promise. And so I do view it as wealth. I view it as savings. Some people may not. I do. And I think in a world of Federal Reserve 2% mandate inflation, even in good times, the dollar's losing value. Everything is bleeding value in terms of dollars. Gold and silver, to me, are wealth and will always be wealth. So, that's the way I look at it, Chris.
Well, I think that's fair. And perhaps as you were saying that, it popped in my mind, what's the inherent core thesis? And maybe I would say it like this: what would be the point where someone would say to sell silver? And at least for me, if we didn't have Jerome Powell saying last week in front of the ECB that, hey, inflation, and we were realizing how little we understand about it. He hadn't said it was transitory and then turned out to be wrong. If Bernanke hadn't said the subprime was a perfect storm that no one could have seen and it was contained, and he turned out to be wrong. In fact, if someone showed me that there was a plan to reduce the 30 trillion plus debt that doesn't seem to have any intent of coming down anytime soon, from what I read out of the fiscal side, and that there was some sort of plan to raise interest rates and that some way the markets could handle that, I guess those have always seemed impossible to me, which is why it left me feeling comfortable that if I have a time horizon on my side, that silver in an environment where, we can talk about raising interest rates, but it doesn't seem like, now we're finally getting to a little monetary contraction. It's not like they're taking away the money, and we already see what's happening. So is that a fair assessment of when would you sell silver, and a good way of looking at that?
It is totally. And not only that, the Fed just came out with a report saying that the dollar is the strongest currency and there is no real challenger at this point for world reserve. Yet Powell came out a few months ago saying, well, there's enough room for more than one world reserve currency. I think they're lying to us again by saying that, in light of what Putin came out and said they're trying to coalesce and build a BRICS currency. Zoltan Pozar came out and said this is Bretton Woods 3, a system based upon commodities, not upon financial assets. I mean, the world, I think, is realizing that fiat currencies and saving in fiat currencies is not a good thing, especially from the biggest debtor nation in the world. And yes, having silver there to utilize it when you need it, for an opportunity, for an emergency, to sell it whenever you need it. To me, that's why I look at it as wealth. And so I hope to never need to sell it, but if I do, I'm darn glad that I do have it. And so, yeah, I think that's exactly what we're witnessing, a Federal Reserve who's been nothing but less than genuine in all of their statements, going, as you mentioned, going back to '08 with Bernanke, being told here recently that it was transitory, admitting that it wasn't. How about being told that they're going to bleed off their balance sheet in June, only to see the balance sheet, in fact, increase? So the rhetoric that comes out of the Fed is anything but true, is anything but honest. And when they're telling us that the dollar is the best currency in terms of world reserve status and there's no real challenger, only tells me that indeed the BRICS nations are probably starting to get under the skin of the Fed, and they're concerned about a real challenger to the dollar's world reserve status. And this has really been my central thesis all along, that it's not what the Fed will do. The Fed has not done anything about getting tough on inflation, and Paul Volcker will be the first one to tell you that. They've done anything but getting tough on inflation. They don't want to light the fuse. It will be a challenger to the world reserve status. It will be Saudi Arabia entering the BRICS nations group the way that Iran just did, and perhaps issuing a statement to the world on a Sunday night that oil will be accepted in other currencies. And that's when the real fireworks start. That is when holding dollars becomes a disaster in traditional assets, as dollars are dumped and rates are risen directly by the market, not by the Fed. That's the kind of environment that frightens me, not what the Fed will or won't do. It's what the rest of the world, which would be 85% of human population, will do if all of a sudden the dollar loses its petro status. And I think we're closer to that than we've ever been. So to your point, yeah, I would follow the Fed less and world events more as it relates to the ultimate fate of the dollar and the markets.
Well, I think that makes sense. Not putting too much. I mean, it's a little tricky because you don't want to say, well, I'll just ignore the Fed because they've gotten things wrong. They still run or slow down the printing press, so worth factoring in. Although, last question we have here from you, Andy, now that we got some of the criticism out of the way, we do have a question from Linda, who is asking the subject of who would have the power to dictate the spot prices of precious metals if the U.S. loses its reserve currency status, which, again, as you mentioned, even Jerome Powell has not said it quite in those terms, but hinted at it. She says it sure would be a way for Russia to get back at the U.S. for the sanctions that we've put on their ability to use their currency. So in the end, she's wondering if something like that happened, is it possible that it would be someone outside of the U.S. dictating those prices? Again, I will add the caveat that we can't know that for sure. We're just looking at what's happening, reading the clues, although Putin does seem to suggest something not all that far off from that. So just curious what you would say there.
I would say that the likelihood of it being that the Chinese Shanghai Gold Exchange is extraordinary. I think that is where it will move to, where the Shanghai Gold Exchange, in comparison to the Comex, is largely cash and carry, meaning you pay, you get. You don't. It's not a futures platform. They do a limited bit of futures, but a very small bit. Majority of it is a situation where you pay for what you get, and so the price is reflective of actual physical demand. I think that the Shanghai Gold Exchange will take over for a price setting mechanism if that were to happen. And, you know, I think that the people who really want to control the price are the ones that aren't complaining about the manipulative efforts of the West that allows them to accumulate metals at a subsidized price. But when it finally reaches a point where the West price just becomes obviously non-reflective of reality, I could see that transition to the Shanghai Gold Exchange, which this is an environment where that market has delivered, I don't know, last time I checked, over 90 times more metal than the Comex has over the last several years, largely in part because it is cash and carry, and that's the side of the world that is accumulating the most metal. So, yeah, I think at some point the Comex gives up its price-setting advantage, and it moves eastward to the Shanghai Gold Exchange, which is already about a decade old and growing every day with its legitimacy. So that would be my guess.
Well, I appreciate that, and certainly going to be interesting to see how things unfold. Unfortunately, you continue to hear these reports of issues that could suggest a food shortage, which is almost beyond comprehension that things could get to that point. And hopefully a lot of these things don't happen yet. We'll just respond to things accordingly. Andy, before we wrap up, could you just let folks know if they have questions or would like to buy or sell silver or gold, what is the best way to do so?
Until our new website is rolled out in August, we would ask people to send an email to Arcadia@milesfranklin.com. We publish at least once or twice a week revisions to our inventory. We will answer any questions that are asked of us, and we will reply back promptly. So that's Arcadia@milesfranklin. Request an inventory, ask questions, and we will reply back immediately with all the answers to all those questions. And to your one last thing, Chris, to your point, for people out there who don't understand what's going on with those food shortages, my eyes were opened and I was blown away. All you need to do is Google the number of food processing fires in the past 18 months. And if anyone who does that can tell me that this is random, I don't know. It's really quite frightening. The list is about 2 pages long, and it continually is happening all around the country, one after the other, after the other, after the other. You would think that these places are made of paper mache and are heated with candles because they continue to burn down, and it's kind of scary. In fact, it's past kind of. It's very frightening.
Well, I hear you, and just wishing the best for everyone out there to find a way to stay calm and do the best that you can each day. I know it's not easy with some of the headlines that are going around, and gee, that's one of the toughest parts of doing the videos sometimes, some of the news that I see and read each day, and I know it's not easy for people out there, but at least is why I try to keep things positive as much as possible in a chaotic environment for these shows. So, Andy, I appreciate you joining us again for this week's Silver Report, which was sponsored by BlackRock Silver. And we'll look forward to checking in with you again next week.
Yeah, last thing, Chris, and I'll let you run. We do have, for your listeners, the 2022 United Kingdom Britannia's on sale for $4.50. 2022 in stock, UK Britannia's. It's the lowest premium I've seen in 2 years. So if your listeners are interested in getting some 1 ounce coins, premium legal tender sovereign mint coins, it is the best premium I have seen in over 2 years. So look forward to seeing you next week, Chris. Stay well, buddy. Look forward to picking up where we left off, and thanks for having me.
All right, Andy, thanks for joining me as always. And also, I do appreciate you taking the tough questions as well as the ones that are a little bit easier. And anyway, that's what we will continue to bring to folks. Hope everybody out there is having a great week, and we'll see you again next week.